What's up, Stephen Johnson, drinking coffee late at night because I've spent about 7 hours on this very exciting thing that I'm very excited to show you guys. Now, I get asked a lot of times, how do you find consistency in the market? How did you find consistency in the first place? Granted, I lost discipline, we'll get into that in a bit. And how do you find an edge from a pattern? And how do you find a pattern in the first place? I'm going to answer all of these questions in this video. But first of all, I just want to talk about the importance of finding consistency in the market, because I've found a ton of consistency, lost it, and now I've found it again. So it's very important to show you the process of how you do it. Stephen Dux, all he did was track data and track specific setups. He got successful straight away. Triforce Trader, I just interviewed the guy the other day. He stresses the absolute paramount importance of data. Tim Grattani got successful initially by tracking data. I want to show you the data that I've tracked, how it's led to consistency, and how I analyze and find an edge from my own data, specifically the gap and crap pattern. It's not all totally for free, although this is the highlights. The link is in the description. If you want to buy the Excel, it's been very popular in the past, selling for 75 and 100 bucks. I stopped selling it, but even though people were asking for it, because I wanted to make it even better. And now it is even better with every single stock that's gapped up more than 20%, every single stock that's run more than 20% and gapped down, and a lot of analysis and charts. And then I've also got for you with like pretty much a 33, 34, 35 page presentation showing you how I analyze the gap and crap setup and how you can find an edge with it too. So let's get into it. Really cool stuff. If you want to buy the Excel, it's 50 bucks. If you want to buy the presentation, see the highlights first, the free stuff. If you want to buy it, it's 50 bucks. If you want to buy them both together, it's 80 bucks. And then I'm going to run it like that for this week. And then after this week, I'm going to push the price higher, because I know that it will be popular if any of me, like if it's anything like the sales of the previous Excel. So let's get into it. Okay, so just before I get into, sorry, I'm looking at AKER, which is closing well, so that's 80 bucks today, very good. Before we get into the information in the Excel and the PowerPoint that I'm about to show you, I just want to show you the importance of tracking data from my point of view. So I was kind of losing September, October, November, December, January, February, March, April, May, June, July, August. And then I had this epiphany of, why don't I track data? And if I can find, this was the first gap and crap setup, gap and craps that I stocked. This was the first setup that I tracked gap and craps. And I tracked them from September to October to November, and I stopped in December. And if we look at the profit chart, I actually started making profit in September, October, November, December, the exact same months that I started tracking data. Then when I stopped, I started losing again. Got way cocky, thought I knew the market, and I didn't. I stopped tracking data and I started losing as a result. And so what did I do? I started tracking data again. I started looking at stocks, gap and craps throughout all of February, and first gap down days throughout all of February as well. And then when you look at me profit and loss, it's quite miraculous to see. My winning percentage is now at 65%. And you may be like, well, it's not all about winning percentage. Well, look, I started tracking data pretty much from this, after this one loss of 4,800. And I had one more red day. And since then, it's kind of been like green week, green week, green week. And then when I add in the, whatever it is that I've made today, 81 bucks, then it's going to be like a $220 week. I'm back to making like $300, $400, $500, $600, $700 a month. And this is trading small without risk. But for me, it all comes to tracking data. So let's look at the data that I track to help you guys, because I want you to learn. And then obviously, if you want this Excel of every single gap and crap, or gap and go, or gap and hold pattern that I've tracked, you can buy it for 50 bucks. I've spent hours and hours and hours on it. It probably works out $1 an hour. It's probably a pretty good deal. But let me just first talk about what I'm tracking. So I'm categorizing these stocks, any stock between 25 cents and $60, I'm tracking what it does. And it's a gap and crap. If it's from the open price, if it pushes pre-market more than 20% and then opens and drops and closes more than 5% from the opening price, it's a gap and crap. If it opens and either goes above or below by 5% by the close, but not more than 5%, then it's gapped up and it's held its gains. It's not pushed more than 5%, it's not decreased more than 5%, so it's a gap and hold. If it's a gap and go, it's gapped up more than 20%, and from the open it is pushed more than 5% and closed 5% higher. This is a gap and go. So there's gap and craps, close 5% lower than the open, gap and holds within 5% of the opening price by the time it closes, and gap and goes that close 5% higher or more than what it opened at. And again, the criteria is it must gap up at least 20% compared to the previous day. Now, I keep them collected together, and this is the criteria I have on my spreadsheet. Again, $50 if you want to buy it. Link is the only link in the YouTube description. Your email will be as part of the PayPal invoice, and I'll just send it straight to you that day. So what do I track? I track the date, I track the previous day price, I track what point did it reach pre-market, and then I think, well, what is the gap up? Because whether a stock gaps up 50% or 30% makes a significant difference in the overall edge that can be calculated in the way you'll actually trade it, because stocks in behavior performs in specific ways, and if you can spot a specific way that a specific pattern plays out over and over and over, you develop the edge, and then you can make money from it. And I'll show you this in the PowerPoint, but for now I'll just show you the formulas. So basically the previous day price of AYT on the 21st of February was 131, and then I pushed it to 223, gapping up a total of 70%. The calculation is the previous day price minus the highest point per market divided by the previous day price times 100 with the brackets, and then this gives you the percentage increases. And then the total decline is again, it's D minus G, so it's the highest point versus minus the previous day price. Again, if you want to buy it, the formulas are all in, you just need to add to it and add the stocks. But for me, I'm looking at AYTU. It gapped up 70%. From the 70% gap up, by the time it actually opened 27% down. Then within the first 3 minutes of opening, it actually spiked 15%, but then it dropped around 13% in the first 10 minutes, and then it ended up in the first 30 minutes being down 5% from the open. So this tells me the stock declined 27%, spiked at the open, couldn't hold its spike within the first 3 minutes, so maybe I should short the spike. Is this a common pattern? These are the types of edges and formulas that I'm trying to determine. And then it ultimately closed 28%. Again, so a stock that gaps up 70% has a major close. It closed 30% down. So maybe stocks that gap up big close very far off the highs. That's a 30% return on investment if you short the open. Then I'm looking at the float, the volume, the percentage of the float traded in relation to the volume, the sector specifically, and the catalyst. So again, you can basically take this Excel and build on it, or you can create your own. I've pretty much give you the criteria. And again, day 2 close, how does it close? And then I turn this into graphs, and I'll show you more about the graphs in the PowerPoint. But I've actually analyzed the data, and I've done the same for first gap down days. So this is basically a stock that gaps up more than 20-25%, and then has a first gap down day. And I track how many days was it up in a row. Was it up 1, 2, or 3? Did it gap up more than 50% before it had the first gap down? What percentage did it gap down when it had its first kind of gap down red day? How did it behave in the first 3, 10, and 30 minutes? And then based on the results, I can say things like, how does a stock behave that gap down after 1 day up compared to a stock that gap down 3 days up? This is the kind of data that I have for you now. Let me just quickly check on AKER. It's up a little bit more. Very good. And now I'll quickly go into the PowerPoint, because I know that sometimes the Excel can be a little bit confusing. So I'd like to take you through a kind of me first ever junctors gappers, because I realized that a lot of people talk about data, but no one actually does monthly reports in penny stock. And I'm like, well, why don't I be the first one to do it? I'm already analyzing these stocks. It's going to take us about 5 hours to put it in the presentation. But if I sell it for $50, well, ultimately it'll probably go for $80 to $100. But in this first video, it'll go for $50. People are going to find a specific pattern, find an edge, learn the intricacies of the pattern, or at the very least, understand the intricacies they need to apply to their patterns to calculate an edge, because no one who I know shows you fucking specifically how to track a pattern, how to calculate an edge. So I've tried to do that in this presentation. Disclaimer, whatever the fuck. So a quick introduction. What you get in here is the emerging trends. So basically, I've tracked every single gap and crap in February from 25 cents to $60. Put the results in a PowerPoint, which determine the different edges that I've found from the data tracked this February that you can apply in March. So the emerging trends, I've got every single chart saved. So if we look, gap and crap setups, gap and go setups, gap and hold setups, every single daily and intraday chart is saved. You can have every single one, and they're all dated and organized in a very nice way. So you can see the difference of how does a stock that gaps and goes perform differently to a stock that gaps and craps. And you can like compare all of the charts together. This is why I've saved them all together. We've got some different annotated examples, and there's some criteria that I've outlined that you should look at before you look at taking a stock as a gap and go or a gap and crap. But first, again, let's briefly go over a stock that's a gap and crap is a stock that's gapped up more than 20% and declined more than 5% from the open to the close. Gap and hold is held within the 5% range. A gap and go has exceeded more than 5%. Look at the big green candle on MBRX compared to the big red candle on CAPR. Both were, and look at this is a criteria right now. Look at the gap and craps here and here and here. These big red candles are very good indicators that the stock's going to fail. And then let's get into a basic overview. I'm not going to show you everything because it's not fair on other people who actually pay the $50 for now and then the $80 later on, or whatever I choose to charge. Let's actually have a look at some of the data. So basically, gappers in general, any stock that's got more than 20%, this is how it closed, between 25 cents and $60. 54% of them gapped and crapped. Now, every single section has an analysis and an edge and then an example. This is very, very basic. There's no superior edge that's been determined. It's basically, but in general, there is an edge on shorting stocks that gap up because 54% of them fail compared to 16% that actually run. So it's just basically it. But we need to determine how can we find a better edge, because I don't want 54%. I don't want a win rate of 54%. I want a win rate of like 70%, 75%. So how can we better the edge? Well, we need to look more in depth. So for example, let's analyze the performance of stocks that gapped up more than 50% pre-market compared to less than 50% pre-market. See if there's a difference. And what we find is, for example, AYTU, it gapped up more than 70%. But does that make it, I've highlighted it here, does it make it more or likely to gap and crap? So I'll show you the results of this one, and there's results all the way through. Stocks that gap up more than 50% are 72% more likely to gap and crap based on February data. Stocks that gap up less than 50% are only 46% likely to gap and crap. A lot of them actually just gap and hold. So if you want an edge, your edge to short gap and craps is generally shorting stocks that gap up more than 50%, according to the data that I've got here. Better yet, more data that I've got shows that generally the higher they go, the harder they fall. So for example, AYTU gapped up. This ended up, if you could, again, I've put analysis and commentary of how you could play this. Early bird catches the worm. If you can start shorting as it dips, risking off high of D, risking 1-2%. I mean, this thing fell from the 220s to the 120s. That's 100% decline. But from the open, we see a huge 30% drop. And again, all of the data is in the Excel. All of the patterns and the statistics are in the Excel and in the PowerPoint. But the analysis and more in-depth analysis is in the PowerPoint to make it easier to understand. So there's a definitive, and here's just another example of another definitive double top. This is on ACHV. And then we'll look at how can we find an edge intraday? Is there an edge when stocks spike? How much does a stock that gaps up and then ultimately craps spike at the open? Is there an average percentage? Well, there is. I'm not going to go into it because I'll give away all of the secrets. For example, another criteria edge that you could look into for your setup or gap and crap setups is, what if stocks gap up like NXTD big and then start to fail pre-market? What if they start to fall more than 8% off the highest point by the open pre-market? What percentage wash out? What percentage fail? Again, this data is in this PowerPoint and it's analyzed with some examples. Again, another edge that you could look at is stocks that gap up and crap. Do they crap for a second day? Do they have a second down day, or do they move up, or do they gap down and rip the next day? This data is analyzed. I'm adding more data to it as we go. Maybe you can find an edge here. The data is in this PowerPoint. Watching out for gap and goes. When do they run? For example, AQMS, we can see that it didn't fully wash out. It had the high low. So when do you need to get out of a gap and crap? There's some examples. Then there's a little bit of information on SEC filings, how to find at-the-market offerings, which dilute shares that better the odds again of finding gap and craps. And then a little thank you. So like I say, I hope you enjoyed it. It's $50 for the PowerPoint if you want the presentation. I am, as far as I know, the only person who is giving insights and data into penny stocks. So for $50 is a steal. The Excel is $50 if you want to buy both. It's $80 only for this week. Because I want to offer you guys a nice little service, a nice bit of added value, and ideally get motherfuckers profitable. I have a bit of a discipline problem. I can't stick to the data, but to be honest, as soon as I start tracking the data, I'm finding consistency again straight away. So I'm very excited about the future. Hope it's been very helpful for free. If you want to buy it, I will give you my Discord link so we can chat over audio call and talk through the data, talk through any questions you've got. If you purchase it, I'm more than happy to help you guys. Thanks a lot. Okay, Yala, thank you so much. I'm glad that it's over because it's like nearly midnight here. I'm dead. But like I say, hope you enjoyed it. Hope you learned some valuable information. I hope you understood the intricacies of how you need to track data to actually find any consistency in the market. Excel is $50. Pay via the PayPal list in the description. Your email address will show up. I'll send it within 24 hours. $50 for the Excel, $50 for the PowerPoint, $80 together. I'll add you on Discord. I'll send you my email so we can chat over anything on audio. Otherwise, live the dream. We will not fail. And I'll see you on the weekend for a green week roundup, up 200 plus bucks. Data fucking matters. Comment if you have any questions on YouTube, and if this does well, I'll continue to produce monthly reports. Live the dream.